Hello everyone, this is Avijit Chatterjee and Rohan Singh recording our weekly session. This is the week of July 8th. Today is the after the market close on July 12th. We're going to talk about a big rotation in the market. We know that with Tame CPI and PPI, the core consumer price index and the producer price index turned out to be, taming or coming down, has helped the market break out in specifically interest rate sensitive sectors like small caps and the biotechs. Both are extremely sensitive to rates and both broke out, and there's been rotation. There's been selling out of the mega cap technology stocks, in particular the Magnificent Seven. So rotation out of QQQ more into the IWM, the Russell 2000 ETF, as well as the XBI, which is the biotech ETF. You can look at those charts. We'll also look at Bitcoin. We know that Bitcoin has been in the news with the Mt. Gox and the German government kind of liquidations. We'll see how well it stood up to those and see if it's really setting up for a bullish move higher. So with that, let's look at the charts. So our YouTube channel is that Charts Are Fun. We encourage you to subscribe to the channel, and also if you like the button, if you could hit the like button, this helps us share these videos with a wider audience. And also our blog site is at Substack, chartsarefun.substack.com. We've been publishing daily blogs. Last Saturday, I started something new. I point you to this call it the Chart Fest, in similar lines as one of my favorite technician, Helene Meisler. She puts out a Chart Fest on Saturdays along similar lines. We are going to be looking at trends of key sector charts and kind of draw out simple trend lines and show where they're headed. Did the first one last Saturday called the Weekend Sector Spider Chart Patterns. Expect to have a repeat tomorrow and every Saturday. So in the past, we used to talk about the sector analysis during the videos. We're trying to keep the video short. So we'll take this out, put it out more on the blogs, and then focus on key market movements in the weekly video. So what happened with CPI data on Thursday was, as we can see, a steady declining trend. The first one here, we're looking at the CPI counting food and energy. And the key news here was it went negative month over month. So you can see that we've marked out a rate of change. This is a monthly data because it's published every month. So we can see rate of change over 1 month, month over month, was minus 0.26. So yes, this was big news that for the first time after a long time, actually, the last time we saw a negative month over month CPI rate of change was back in the COVID times in 2020. Since then, it's been, of course, it gone as high as almost month over month rate of change at 1 plus point in the month of I think towards if you look at 22, sometime towards peak 22. Since then it's been coming down. Of course, this month over month does zigzag quite a bit, but the steady trend with respect to when you analyze it over the year, which is a 12-month rate of change, ROC 12, that has been steadily declining since the peak in 22 around summer. And we can see that now it is flattening out just below the 3%. It came in at 2.98. Now this is the, the CPI including food and energy, but if you do the core CPI, which is excluding food and energy, that didn't quite come out negative, but came quite close to 0.25. It was at 0.26 for this month of June over May. That has been also steadily declining since the summer peak, and we can see that that's at 3.28 right now. Producer price index was also, if you look at the core producer price index, also at 0.26. That got published today. So consumer price index was Thursday, producer was today on Friday. And we can see that this has steadily come down and almost closer towards the 2% target that Fed has. However, Fed's not looking at the producer price index. They're looking at more of the core consumer price index, and in particular they look at the PCE deflator. They want that to be coming down and closer to the 2%. So that's their objective, but on a PPI basis we already are there near the 2%, and we can see that it's kind of plateauing out here in that level. And so that's something that the Treasury market rallied in the sense that people started putting in money into Treasuries with the expectation that the interest rates will come down. Interest rates coming down is directly connected with Treasury market rallying. So when bonds rally, yields come down. And so what we hear is in the 10-year yield chart, a classic head and shoulder pattern. This is drawn out as in a 60-minute, which is an hourly chart. So here we can see a neckline around 4.26%, a left shoulder around 4.34, came down to 4.26, went up to a head near 4.49 or 4.5%, came back to 4.26 from the right shoulder at 4.33, very close to the 4.34, the left shoulder. Then it broke down, and we can see this big bearish red candle on the breakdown. That measure target is closer to 4.24, almost close to the 4%. So if that trend continues and declining yields, that's actually going to be very positive for small caps. So given that, let's look at what the small caps did. If you look at small caps relative to QQQ, QQQ of course is a market weight indexed, technology Nasdaq 100 ETF. We can clearly see that and this is a multi-year chart. We can clearly see that these levels of 0.4 was last tested around the dot-com collapse 2000, around that time frame. From there, as the ratio of small caps outperformed the QQQ, it went up to a ratio of 2 IWM over QQQ. And then from 2008, from the financial market collapse that happened in 2008, 2009, that trend has been nothing but declining, and to the point where this month have tested even below 0.41. We tested as low as 0.4. So knowing that this has come down a lot and at a key test of the 2000 level at 0.4, many people have been saying that if you look at valuation wise, well, QQQ is trading at P by E, forward P by E, even at 24, 25. S&P 500 is trading at a forward P by E closer towards 21, 20. But if you look at small caps, they're in more 13 to 14 forward P by E. So Tom Lee and others have been talking about this, that small caps are really valued to the point where it's more attractively valued, and hence the upside is more than QQQ. And if this ratio has indeed bottomed out at the 0.4, then we can expect it to outperform QQQ and IWM to move higher. And that's pretty much how it kind of started off after the CPI data. So CPI data hit on Thursday, which is yesterday, July 11th, and we can see a gap up in IWM with heavy volume. Each bar chart here is the volume for an hour. This is again a 60-minute hourly chart. So we can see that the breakout happened. The previous level was 204, was a resistance. It never even tested 204. It broke up right near the 206 plus, 206, 207, and steadily climbed throughout the day. Today it kind of, with the PPI in the morning, initially it did have high volume buying, and then it kind of stayed flat, maintaining the 213 level. Now, if you look at the chart of IWM from a daily perspective, this is a classic ascending triangle. So here around the 209 to 211, we have what we call as a resistance. We have the lows climbing from 190 to 197 to the recent lows near 198, and then the breakout. This is heavy volume breakout. We broke out opening right above that 209 level, 208, 209 level, and then climbing. Now that's measured to a target towards to the 231, 232. So we've got decent upside left. So right now from 213 to 232, you're talking about another 20 points or so, which is little almost close to 10%, 9 to 10% upside in small caps. So that's kind of really a brilliant move that can happen as money rotates out of high mega cap technology stocks into small caps. And if you look at QQQ in an hourly chart, QQQ in an hourly chart shows just the money moving out. So it had been on Wednesday end of the day market, it closed near 503, 504, 503.5. And then as the market opened towards the highs and throughout the day selling going on with heavy volume, money was effectively pulling out of mega cap technology stocks. And as we saw, moving into the small caps in the hourly chart here, heavy volume money moving, and that's where it has been trending higher. So that's something to look at. If you look at the weekly chart of small caps, we can even see a beautiful bullish pennant. So we can see a climb from 160 to 211, and then it has been kind of lower highs and higher lows. That's how a pennant forms. It's almost like a triangle with the highs converging, coming down versus the lows going higher to the point where this breakout happened. Look at this breakout with the volume being heavy. That's a classic bullish pennant breakout. And this, as I said, on the ascending triangle pattern on the daily is headed towards the 232. So good chance we are effectively headed towards these levels that we last saw in 2021 in the 230 plus region. So that's where we feel that small caps is headed, and this was a very bullish technical breakout with the heavy volume. And now expect PPO to also, it had pulled back in the last few months and almost testing the zero line, and now kind of expect the PPO to go higher. And as PPO goes higher, we expect the market to do very well on the small caps. One of the key sectors that tallies with the small caps is the biotechs, and this is the ETF for the biotechs called XBI. And here as well we see a beautiful ascending triangle pattern and a breakout. So on the tops, the resistance level was around the 95 level, and then the lows from the April low at 81 has been climbing to 86, 88, and more recently towards the 90. That breakout measures to 109. So this is also a very bullish looking chart for XBI, again also an ascending triangle pattern and decent volume in the breakout in the last couple of days. And if you look at a longer term chart of XBI, that's also a beautiful ascending triangle, but this target is measured back up to 143 because the lows tested in 2023 October was near 63. The highs was 103 that it tested towards the February of this year. So 63 to 103 is 40 points. At 40 to 103, it's 143. That's closer towards the levels in 2021 that it last saw. So overall, bullish looking pattern on the biotechs, bullish looking pattern on small caps. Expect both sectors to outperform over the next several months, and the direct beneficiaries of decreasing rates, lower rates, and as Federal Reserve starts cutting rates. And though there may be one or two rates as they have signaled for this year, if the economy does slow, which many are fearing a recession might be in the horizon, given the unemployment is 4.1, given the slowing down of consumer price index, as well as expect ISM, both manufacturing and services have been below 50, which is a contraction, 48.5 level. So overall, this fears of a recession, if that happens, and Fed may start cutting rates even at a faster rate. But ideally for this bullish breakout of the biotechs and the small caps would mean where it's more of a Goldilocks, not quite a recession, the market keeps climbing, and at least the market is climbing from the small caps and biotechs, but the economy doesn't go into recession, with Fed doing just enough to keep the rates going for the consumers to continue spending. So I wanted to end with the cryptos. This is a sector that we've been actively watching. What I do see here on the daily chart is a beautiful positive divergence. We can see a lower low in the crypto since its breakdown below 56.5. That was the last low from early May. We see a kind of a quadruple top around the 72 to 73 level, 73.8 in March, then 72.8 in April, 72K in May, and then 71.9, 72K in June. Quadruple top, but in many ways this is an M-shaped double top, you could say. The M climbing from near the 50Ks to the 73.8, pulling back to the 56.5 as the shallow tip of the M, going back to 71.9, 72, and then breaking down. If this is indeed a M-shaped double top, then that could measure down to 39, 38. Okay, I doubt it's going to be that. I think if any, this was a bearish trap, and if any, we are going to expect to see a bull run resume. So after the liquidation of Mt. Gox, the 140,000 or so bitcoins that they released being held up because of freeze in the exchange from 2014, 10 years later now they've been able to retrieve those coins and they're handing it back to the owners of those coins. And in that process there was fears of liquidation. But look at volume. If this was massive liquidation going on, why aren't we seeing volume as high as what we saw here in the March timeframe? Not really as much of, there was some selling, but when the selling happened, by the time the candle closed for the day, it had left a very bullish reversal candle with a long tail, reversal tail like that. That's actually very bullish. So lower lows for 58.4 to 53.5, but higher low in RSI. That's how positive divergence forms. That's how bottoming happens. So we expect potentially a 53.5 to 59.5 kind of a cup with a handle forming here. And that measured target is easily towards the, so that's roughly 6,000 points. So 6,000 plus 59.5 is 65.5. So this is where we have in the past, 66, 65 is where we broke down from. So expect that upward move coming in the next few weeks. Another thing that we were looking at is one of the biggest miners in the crypto space, Mara. That has been forming a beautiful ascending triangle as well. So here we can see that the 22 to 23 level is the resistance. That's what it tested a few times. The lows are climbing from 14 to 15, 16.8, 17, 18.3. And even in the recent sell-off from Mt. Gox and German kind of fears of liquidation, it does formed a higher low. It did not break down to lower lows. It maintained a higher low above 18.37 from June at 18.78. And today it had a very bullish upward move. You can see that a nice white candle with volume higher than in the past 3 days. And even in these selling, when it came from 22.98 to 18, this was on declining volume. It was not as much volume as you can see with the upward move, and it went to 22.98 with a bullish white candle with higher volume, and even in today with a bullish white candle with higher volume. So this pattern is indicating that Mara potentially is setting up for a breakout above 23 and run to 31.5, which is closer towards the December of 2023 level near 31.3. So given that Mara is looking bullish, which is the key miner in the crypto space, that likely reading tea leaves from here means smart money thinks that cryptos are going to rebound, and potentially the target that many have put, Tom Lee has put 150,000 target for crypto or Bitcoin in 2024. Some have put 100,000. I wouldn't rule out, in fact, Anthony Scaramucci, who's also a crypto bull, who's often on the CNBC, was on CNBC this week, and he put in a target of 100,000 this year. And Tom Lee reiterated last week his target of 150,000. So things are looking good with respect to the crypto. I would, however, be cautious on rotation of money, so not chase the large technology stocks. Start thinking about rotation of that and money moving into small caps. So look at investing into small caps and benefiting that rise that we see ahead of us. This kind of bullish ascending triangle of IWM towards the 232, and then the XBI has a beautiful ascending triangle which could initially climb to the target near 109, 1010, and then from there potentially up to 143. So with that, thank you. Have a great week of trading. Talk to you next week.